it tells you something extremely important. And this is in common with all the other central banks. And remember, they've been told by Vladimir Putin, who's had his reserves stolen by us, don't trust the West, don't trust their currencies, buy gold. He's pretty much said that. When we get a credit collapse, this is going to be a Western phenomenon.
The trade war has triggered a financial shift like never before. China and Russia are making moves that could end the US dollar's dominance, and gold is at the center of it all. Why are central banks worldwide dumping dollars and hoarding gold? For decades, the West convinced us that gold was outdated. But behind closed doors, they're stacking it like never before. Are you ready for what's coming? Don't get left behind.
I would say that the futures and forwards markets are doing what they should do. Basically, it's speculators taking a view on where the price is going. I mean, they're looking at it. They are inevitably looking at it as gold is going up because you're accounting in dollars or whatever. Okay. The answer, as far as physical markets are concerned in the West, is that sentiment is very poor. Nobody's really bought into this. I mean, they really haven't. If you look at sort of total, sort of portfolio exposure, it's probably less than 1% is exposed to gold. Now, given that gold is real legal money, that's an extraordinary situation when there is so much risk around with all the debt and everything else. It's bizarre. A lot of it is due to the fact that the Americans have run a very successful propaganda campaign trying to remove gold from the financial system. And so for the last 50 years, people have come to believe that rather than, the reality, the common law reality, plus the accounting reality, the difference between money and credit. So the sentiment just isn't there. And we're beginning to see a little bit of demand coming for ETFs. Now, I think that demand, I mean, we're seeing it more in America than we are in Europe, but I think that demand is from, investment managers, big investment managers, who are not necessarily buying into the concept of gold, but see that the price has been rising, et cetera, and this is something which makes sense to include in a portfolio, if you like. I'll put it no more strongly than that. So I think we're seeing that sort of advanced institutional demand. I mean, what tends to happen with a bull market, if we can just think in those terms rather than the true terms of the relationship between gold and credit, what tends to happen is that you find that the speculators will begin to drive up prices first. You will then find that more serious players will then get in on the bandwagon, and the last people to play are the public, because they will have seen that something has risen and it's risen and it's risen and it continues to rise, and therefore you've got to buy it because it's obviously rising. It's obviously rising. This is the place to be, particularly if everything else is not looking good. So we haven't got that ETF thing, if you like, virtually at all, except for a few institutions who are beginning to adjust their portfolios. Mm-hmm. And I think that probably sums up the current situation. Gold has this additional factor that, ahead of the speculators, you've got central banks who begin to look at their reserves and the balance of reserves and all the rest of it, and they start adjusting things. Mm-hmm. It is a common statement that the Central Bank of China, the People's Bank of China, has been buying gold. That's not the way to look at it. Actually, what they've been doing is dumping dollars. Now that, if you understand the difference between the two, it tells you something extremely important. And this is in common with all the other central banks. And remember, they've been told by Vladimir Putin, who's had his reserves stolen by us, don't trust the West, don't trust their currencies, buy gold. He's pretty much said that. Mm-hmm. And, so you sort of think, these guys, I tell you, the central bankers I've met are actually pretty cute. Most of them do understand, sort of, if you like, the outcome for the purchasing power of foreign currencies, et cetera, et cetera. It's just they're not in a position really to do anything about it themselves. Mm-hmm. But, the fact that central banks continue to buy gold, in fact, they're pretty much cleaning out all the mine supply. tells you quite simply that these guys really are in the know. They're ahead of the speculators. The speculators can see it, so they go and buy. The poor old swaps and bullion banks, find that they're getting squeezed. I feel so sorry for them. I'm going to cry bitter, bitter tears. But I don't think we need to dwell on that too long. But no, I think it is a very, very important point that what the central banks are doing is they're not buying gold, they're selling fiat currencies because they understand the difference between money without any counterparty risk and currency with counterparty risk. So what they're telling us is, hold on, this whole system is looking a bit dangerous. Let's put it that way. Well, I believe it will, because, put yourself in the shoes of a foreign central banker. I mean, he'll be looking at the effect of the tariffs on the consumer price index. He'll be looking at the effect of the tariffs on the consumer price index, and he'll be looking at the budget deficits and how that's, inflating the whole thing, deflating the purchasing power of the currency by inflating its quantity. So he will do that thing which I was talking about earlier on. He will look at, what am I getting actually paid, let us say, by holding US treasuries? And, what's going to happen to the purchasing power of the currencies over the period which I hold them? And if it doesn't stack up, he's going to continue to sell dollars. Now, does he go and buy another currency? The answer is no. Because, as I keep on quoting Steve Hanke, because I think he's got such a good turn of phrase in this. He says that the dollar is the least dirty shirt in the laundry. And he's right, because the other currencies, if the dollar goes down, the other currencies go down even quicker, as we're seeing at the moment. The dollar is going down against gold. And if you look at the other currencies, they're going down even faster against gold, which means that they're also going down against the dollar, which is why the dollar's trade weighted is suddenly in a fantastic bull market. And it's got a lot further to go on technical considerations alone. Bear in mind that when we get a credit collapse, this is going to be a Western phenomenon. I would assume, and it is an assumption, that Russia and China will protect themselves from a collapse in the dollar by going back on a gold standard. They have got the gold to do it. And furthermore, they can manage the situation, so they will always have gold reserves. Now, that being the case, then their ambitions for the whole of Asia, the Shanghai Cooperation Organization, and BRICS member countries as suppliers of commodities and raw materials, foodstuffs, and all the rest of it, equally important, means that over half the world's population, I think, will be in a longer-term industrial revolution, bringing their living standards up as ours is collapsing. So that the demand for commodities, for silver, etc., is going to continue, despite the fact that we're going to be as poor as church mice and not be able to afford to do things, because nobody is going to buy it we can only do things which we can export to China. So, which actually is an interesting take, because here we are lambasting China for undermining our industries by cheap exports. Whereas it could actually turn the other way around. We find that we try and export to China and they say, ooh, hold on.
The shift is happening faster than anyone expected. Central banks are hoarding gold, the dollar is being dumped, and the financial system is on the verge of a massive reset. What do you think? Will China and Russia succeed in bringing back a gold-backed system? Drop your thoughts in the comments below. Don't forget, like this video if you found it valuable. Subscribe for more deep dives into the global economy. Share this with someone who needs to wake up before it's too late. Stay ahead, stay informed, stay prepared. See you in the next one.